Accounting equation and Excel. Receive payment form for previously issued invoice. Get ready and some coffee because we're going to learn the accounting foundation, the accounting equation, using Excel. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our Trust Me, I'm an Accountant product line. Yeah, it's paramount that you let people know that you're an accountant. Because apparently we're among the only ones equipped with the number crunching skills to answer society's current deep, complex, and nuanced questions. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet, but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there or just construct your own worksheet as we move forward, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 3 tabs down below. Example, practice, blank, example, in essence, answer key. Practice tab having pre-formatted cells so you can practice the practice problem with less Excel formatting. The blank tab, the one we will be working on, is where we started with a blank worksheet, basically working within a template now. However, we will be adding to that template as needed as we go. Let's go to the example tab to get an idea of what we will be doing. Quick recap of what we have done thus far. We've been entering transactions starting with the beginning balance transactions, imagining we had a prior accounting system, at least to start out the business, which we then entered as our beginning balance using the accounting equation as basically our trial balance, which we can then use to construct our financial statements from. We then looked at some of the beginning journal entries often seen when starting a business, such as getting capital, getting in essence cash needed for the startup costs, things like property, plant, and equipment, and then inventory. Then we purchased with that cash, property, plant, and equipment, and inventory. And then finally, we had some sales of inventory that we looked at last time. Sales on account, typically done with the invoice type form, which again is a data input type form when we think about it from a specific data input perspective, whereas more broadly, we might call it an invoice or a bill. It might be done electronically. It might be sent out still, but from a data input perspective, we're going to be calling it an invoice. Invoice meaning that we did work, or in this case, provided goods, imagining we actually shipped them the goods, say in a box of guitars. They requested it possibly with a purchase order, hadn't yet paid for it. Within the box, there's an invoice that they're going to have to pay us with, which they might call a bill. But when we entered it, it's an invoice on our side. That's what the data input form is on our side. That means that we have to track the outstanding balances with the invoice. And then when they pay us, we need to basically reduce the accounts receivable and record the cash that we have received. And that's what we're going to do this time. We're going to say that we're getting paid for items that were invoiced in the past on account. Let's go to the blank tab over here. Now, if I look at the subledger, notice if we have accounts receivable, that's only going to happen if we have a form of accrual type business, remembering that we don't get to just choose if a business is accrual or cash based, because it'll depend in part on the industry. In other words, if I'm in an industry of bookkeeping or something like that, I can't just say I'm going to be on a cash based system when the custom of that system, of that type of business, is to do the work and then invoice. It's just the nature of basically the business. And when I invoice people, that means I'm going to do an accrual thing because I'm going to record income before I have actually received the cash. I need to do that so that I can track the accounts receivable, which is the account that tracks the money that is owed to us for work that has already been done, revenue, in other words, that has been earned but not yet collected. That means I have to have this subledger account because I need to track it not only by date, which would be done in the general ledger account over here in our basically accounting equation, but I also have to track it by customer. That's what the subledger is doing. So within this subledger, you will recall that we had our beginning balances that we started out from that we are imagining were generated from the prior accounting system. And when we put the beginning balances in the system, we put them in our subledger so that we can get the proper amount for the accounts receivable and use our normal accounting system to then collect on those, lowering the subledger when we do that. And then we had some other invoices down here that for Anderson and Jones. So this time, we're going to imagine that these three payments, these three beginning balances are the ones that we're going to be working with that we've been receiving payment on. Now, how are you going to receive the payment? This will depend on the type of industry and how you're setting things up. If you have a software type of system, then they might send you a physical check, in which case you would be receiving payment with a physical check. More and more these days, you're going to send out the invoice possibly with an email or something like that, with a form of payment that might be electronic transfer with the email, in which case they can pay with an electronic transfer, where you might be able to automate the system where the system will record the receipt of the payment and then possibly link it with the bank feeds and whatnot. However, even if that is the case, you're still going to have to know kind of what is going on, because when you track the accounts receivable, it's going to be a little bit more complex due to the fact that you have the subledger here, and you're going to have to make sure that you're keeping an eye on the subledger to track who has paid you, who has not paid you. Some software will force the subledger to always match the general ledger by forcing every time you hit accounts receivable, the general ledger account, to add a customer so that the software can then adjust the accounts receivable. Some software does not do that. There's pros and cons either way, by the way. If it doesn't do that, a common problem is that your subledger will not tie out to your general ledger, and that's going to be a problem because then you're not going to know how to collect on your receivables and whatnot. All right, so keeping that in mind, we're going to go back on over here and we're going to say, okay, let's go down and we're going to say the next one that we're going to do way down here I'm on line 56. I've got the freeze panes up top so I can still see the headers. I'm going to say this happens on let's say 17, and we're going to say that we receive payment, I'm going to say on account. So we have to keep in mind the different ways that you might see this in terms of a book problem and in terms of in practice, and the different terms that we're using, terms that are constantly evolving as we have more sophistication in technology. So if you look at this from a book problem standpoint, they have to tell you somehow that you got payment, meaning you got cash or some kind of cash, a check or an electronic transfer, but you didn't do the work now, you did the work in the past. So a lot of textbooks might use language such as you received the payment on account, meaning you received the payment for an account that went up in the past for work that we did in the past or invoice that we've provided in the past. In practice, of course, you're going to receive some kind of payment, whether that payment be a check in the mail or whether it be an electronic transfer. It could be like a credit card payment even, for example. And that payment is, of course, going to be the thing that is going to trigger us receiving the payment for work that was done in the past that we need to then match to the appropriate invoice so that we can tie it out in the subledger and tie it to the invoice more particularly. So we're going to imagine this came from Anderson Guitars. That's the customer that we received the payment from. So the next thing we have to keep in mind here is we could put that payment directly into the checking account. And in some cases, that would be the easiest thing to do. For example, if we sent out an individual invoices to customers, and then they give us an electronic transfer directly to our bank account from the invoice, then it's going to hit our bank account in the same amount as the electronic transfer. And it might be the easiest thing to do is just to record it directly into the checking account. We might be able to automate that process. However, if we have to go through a credit card kind of account system or something, they're paying us with a credit card, which means we have an intermediary bank involved, the credit card bank, or they're paying us like in cash or using some other kind of intermediary payment system, which is going to group the transactions and then put it into our checking account, similar to what you might use a PayPal account to do or something like that. Then we might want to put it into undeposited funds. This is something that we will see not often in textbooks, meaning in textbooks, they kind of skip over this added problem of making sure that everything that hits the checking account is grouped in the proper order to make the bank reconciliation as easy as possible. In practice, that becomes a big problem when you deal with credit cards, when you deal with cash payments, when you deal with intermediary payment platforms such as a PayPal or a Stripe or something like that, because they're going to group the payments together before it hits your checking account, which means that you have to have the same grouping in order to reconcile. So therefore, I'm going to put this into undeposited funds to show you how that's going to work. 5,000 here, that's going to be the payment. We're going to increase undeposited funds instead of cash, and the other side is going to decrease the accounts receivable, negative accounts receivable. There's the journal entry. One asset goes up, the other asset goes down. If I copy my accounting equation over, there's going to be no activity, even though one asset went up and one asset went down. We basically got a better asset. We lost the accounts receivable. We increased, in essence, cash, even though it's not yet in the checking account, at least according to our bookkeeping system as of thus far. All right, I'm also going to put the zeros across the board. Let's put some zeros across the board. Zero, nothing happened to the income statement, even though we received cash because we already recorded the revenue, in this case, in the prior accounting system. And then I'm going to say, which was last period, right? We recorded the revenue last period, even though we didn't collect it till this period. That's a timing difference that is going to be accounted for differently on a cash basis versus an accrual. We're doing an accrual thing here because we're forced to, because we're tracking accounts receivable. Anderson Guitar, I'm going to say this equals or negative, and I'm going to pull over that 5,000 into the subledger. So now this column represents what's owed from Anderson Guitars. They had 5,000. And then we invoiced them again for these three, and then they paid us 5,000. So now they owe us 3,623, which are these three. That's how my subledger is basically working. I'm trying to make it as streamlined as possible for our worksheet here. In accounting software, it'll typically be more detailed, and it'll give you more information tying out this to this one in particular. In other words, this was created with an invoice. Notice that I can match out the dollar amount in the subledger here, this compared to this. But in software, you'll actually be able to drill down on the invoice form, which will then say paid. So it gives you another extra tie out, and then it'll link to the received payment. So you can really tie it out even more detailed than even the subledger. But this is the general idea. Our total subledger account now is 23,722, which should match what's in our account over here in the general ledger, which is 28,722 minus 5,000, 23,722. I think that was it. All right, so that's going to be that. Let's put the balance down here, equals the balance, and let's sum it up. Let's put some underlines across the board. Underline, underline, underline. If you don't put an underline, you're going to undermine your whole system. Don't undermine your system by not putting an underline, because then you won't be able to tell where things stopped. So this is going to be the sum of the prior balance plus the current activity. Going to copy that across the board, Control C, pasting it across the board. Just the formulae though, just the formulae, people. Don't mess up my color coding, or you get points off for that if I was to grade your paper. I had a color coding thing and you messed it up, and now you will be penalized. You will be penalized for that. It's not acceptable around here. All right, we'll copy this down, And then we'll copy this down, see if that red turns green. It does. That's a good sign. Put an underline. All right, let's do it again. Otra vez. Otra vez. Por favor. Another time. Another round. Let's do this. This time it's going to be 118. Same idea. We're going to receive payment on account, but this time from Jones. Jones Guitars is paying us. Okay. And so we're going to imagine we got a check from them, or we got an electronic transfer from them that hit our account. Even if it hit our account in the bank feeds, then maybe it doesn't automatically tie that out to the invoice, right? So we might have to go, even if it was an electronic transfer and we're using bank feeds, I can't just record it as revenue. I have to match it to the invoice in some way. All right, so that's what we're doing here. We're going to say they paid us $7,500. So same thing, otra vez, another time, once again, once more. Receivables going up by $7,500. Oh no, they're going down. Receivables going down, man. They paid us. And then we're going to say undeposited funds is going up. That's the way it goes. There it is. Let's put some zeros across the board. Zeros across the board. Zeros. Nothing's happening to the income statement, even though we received cash because we recorded the invoice. In this case, in the prior period, we're in Jones Guitars. This is going to be negative of the payment received, $7,500, and then we'll copy down the good old balance. Boom. And so now we had invoiced $7,500. Then we invoiced more here, but then they paid us in that original invoice, so now they only owe us $4,599, which is the sum of these two that are still outstanding. Our current accounts receivables at 16,222, which should match what's in our general ledger in our accounting equation, which should be this. It should be this and this. That's 16,222. I think that's right. Let's copy this down. Copy that down. Roger out. 10-4. Copy that. Copy that. Nothing happens to either of them, even though something did really happen because two asset accounts were affected, netting out to zero. All right, let's pull in the balance, and then we'll do one more. So we got to put some underline. Don't undermine the system. Make sure you use the underline. We're going to underline, we're going to underline, we're going to underline, and then we'll sum it up then. Equals the sum of the last balance plus the current activity. We're going to copy that, Roger, pasting it, just the formulas, pasting it, just the formulas. Pasting it one more time, just the formulas, people. And then we'll copy down the balance, making sure that we're still in balance with the totals. It's turned red, but once we do the whole thing, it should be good to go. All right, it's back to green. All right, one more time. We're going to say this also happened on, let's say, 118. And so once again, we're going to say that we got a payment this time of $8,000, received payment form, this time from Smith Guitars. Okay. So once again, we're going to put that not into the checking account, but into undeposited funds. We're going to imagine that these were all paid to us by like a credit card company or some intermediary platform like a Stripe or a PayPal, which are going to need to be grouped together, which we'll see next time. That's why it's going into this clearing account instead of directly into the checking account. And I'm on the wrong line. Maybe I put this one on the bottom. Maybe I should put the 8,000 down here to be consistent. Just put it down here. Not everything should be lined up properly. All right, and then accounts receivable is going to go down. All right, let's put the zeros across the board. Tab. Oh no, not there. Almost had a heart attack again. No need to have a heart attack when there's an undo button. You don't need to spaz out. Oh my God, I put a 0 there. Okay, just Control Z. There's a Control Z, just stay calm. There's no need to take time off your life spazzing out. I'm gonna say this is negative. Smith guitar. All right, so we had Smith guitar. Invoice has now been paid. They don't owe us nothing no more. Boom, it's been paid off. We'll copy down the ending balance. Currently subledger at 8222, which should match the good old GL, general ledger, in our accounting equation, which is going to be this minus that. 8222, MUI B to the end. Let's put the underline in place. Put an underline, underline, and then underline. All right. And then we'll bring down the balance once more. Let's copy this down to see if we're in balance so far. The transaction should be in balance. Nothing's happening because one asset went up, one asset went down, as we've seen before. And now we'll bring down the good old balance with our sum function equals the sum of the prior balance plus the current activity. Copy that across the board. Here's the board. We're copying across it, pasting it, formulae. Pasting the formulae. Pasting the formulae. Getting into the flow of this thing now. This is easy. And then I'm just going to copy this down. Boom. Bam. Shakalaka. Turns back green. That's good. And then we'll put some underlines here, holding down Control to select next to each other, non-adjacent cells. So I can do it at one time. All right. So now we have all this money in undeposited funds, which we're going to imagine is in the Stripe account or in the PayPal account, or it's in the credit card company, which is going to enter into our account possibly as one lump sum to hit the checking account. If I put these three numbers into the checking account directly, and then it transferred in from the intermediary Stripe credit card or cash account into my checking account as one lump sum number of 20,000, then I'm going to have this matching problem in order to properly reconcile, and that's going to be a pain. And if there are fees involved with the Stripe account or the PayPal or whatever, the credit card, that's going to further cause problems if it was directly into the cash account. Here, I could deal with those fees as I do with a transfer from undeposited fund into the cash account. Also, when I look at the form that was used to go into undeposited funds, it's not going to be a deposit form typically. It's going to be the receive payment form, which is a form that does increase a type of cash account, because you could increase checking or the undeposited funds, but more specifically, it's a form that decreases accounts receivable. That's what the receive payment data input form is. Noting that I don't often have to provide this form to the client. We could, acting kind of like as a receipt, a thank you for the receive payment, but you can think of it more as an internal form, unlike an invoice, which we usually think of as a physical form. So just let me point out that when I think of an invoice or a bill, people usually think about a physical invoice or bill, and the problem is that we, from a data input standpoint, have to convert the thinking to a more specific terminology of a data input form, invoice being the form that increases accounts receivable for a sale made on account for which we provided goods or services but have not yet been paid for them. When we talk about the receive payment form, then that's going to be an internal type of form. So we're not actually going to be providing, most likely, or we could, but oftentimes we don't provide a physical paper form for it, but we still have to think of it as a form from the perspective of a data input form, even if it's automatically generated by our system, because when we drill down on the general ledger accounts, for example, it's going to show data input type forms, which will tell us basically what happens. So if I see a form that's basically a receive payment form, that means that the cash account could be going up, but it means more specifically that an accounts receivable account is going to go down. That's what those forms always do. And then I can take it out of undeposited funds and put it into the checking account with what we would call a deposit form. And that means the deposit form, if we use this system, will always be the form that increases cash, making it a little bit easier for us to sort our general ledger account by transaction type, because increases should always be deposits. Whereas if I use the receive payment form to do deposits sometimes, that means that the increases to the checking account will include sometimes a receive payment form and sometimes a deposit form. So just a couple things just to kind of get the terminology down. Again, the terminology as things change, as some things get automated and so on and so forth, as things go from a paper system to an email system to an electronic transfer system, the thinking about the terminology is what is getting left in the dust, and terms are changing and people are getting confused about the terms. So I'm trying to be as specific as possible about them.